Digital marketing seems to be the mystery that most entrepreneurs struggle with, and real estate investors are no exception. The truth is, there are multiple avenues to success. Those experiences will be best shared by the guests on this podcast. My name is Jason Wright, and I would like to welcome you to Real Estate Investor Marketing Stories. What is going on, Jason Wright here? I bet you thought I gave up on this podcast, didn't you? I just checked, and I have not published an episode since May 11th. That is nearly 5 months, my friends. Nearly 5 months. How in the world does that happen? Well, I'll tell you why it happens, or how it happens. It's been a challenging year, my friends. It's been a challenging year in business and personally, so things happen, your priorities change, right? So anyway, a lot has changed since we've last spoken. I've got a bunch of great podcasts recorded that I need to release, hence why this podcast is being released. So I think for everybody, if you think about where you were at or where your business was at in May compared to now, and I'm recording this intro October 30th of 2024, so we have an election next week. It's been a strange year, and I'll tell you what, I feel like there's positive indicators that I'm seeing anyway. I'm seeing people start to focus on raising money for deals. I'm starting to see some things rebound and bounce back. So hope you guys listening are as well. As usual, I've got a great guest to share conversation with you all today. My guest today is Bill Hamel. Bill's a great guy. He is the founder of Collecting Real Estate. He's focused on multifamily in Florida, New York, and Tennessee, all great markets. You don't hear the New York one as much, but he knows that market really, really well. Interesting thing about Bill, and here's an area Bill and I are very, very different. He is completed and enjoys marathons, Ironmans, and ultra marathons. Sounds like hell to me. I'm not built for it, but he is a tougher man than I am. So let's check out the conversation that I had with Bill. Hey, Bill, welcome to the show, man. Good to have you.
Hey, thanks, Jason. I appreciate you inviting me on.
Absolutely, my friend. So tell me how you got started with real estate and then kind of real estate investing as well. Love to hear that story.
Wow, that goes back. I've told this story probably 50 different ways over the past 3 years since I shifted away from being a hands-on property manager of our portfolio in the capital region of New York. I was a busy guy for a long time, slowly but surely building a portfolio. When I was 21, didn't know what I wanted to do with my life, working in a restaurant. Fortunately, had a friend at the restaurant lent me a book, Nothing Down for the 90s by Robert Allen. And that book was pivotal for me. I went and built that portfolio, self-managed along the way, did all the work with my partners, all the wrong ways of building a business. But 2019, I saw the light, said I'm going to go from small properties to the bigger apartment communities, raise capital, do whatever it takes to build that portfolio, not only in New York, but also in Florida and Tennessee markets.
Got very nice. Very cool, man. So are you still self-managing anything these days?
Yeah. And it's funny because in 2019, at that point, I decided to get into some mentorship groups, which was fantastic. I did so much over a 20-year period of time, and I don't know, 10, 12, 13 years ago, I felt like I knew what I was doing. I was a bigger player in the Albany, New York area, at least for 5, 10, 15, 20 unit type properties. And I stopped learning. And that was horrible because I was doing my thing, self-managing, buying things along the way, and I thought I knew it all.
Yeah.
And I quickly realized after joining a mentorship community that I had a lot to learn.
I like that. I like that vulnerability, and it's a good thing for us all to remember. You know, we're all kind of blessed with a couple of gifts, things that we're really, really good at that we can be great at. And no one's ever going to be great at everything. And you know, it's important to surround yourself with information and people that are strong where you're not and doing things differently than you, because you get perspective. Recently, a little unrelated, but kind of related. Recently, I kind of get my ass kicked by really diving into AI and marketing and like what's out there and what people like and what they don't like. I've just discovered some of the technology I wasn't even aware of, and it makes me feel like I'm just starting this week in my business. It's like, wow, I know so little about what people are doing and what's out there. So I know my knowledge has value, but like you said, I'm not under the impression that I know it all, because it's just changes all the time. Like it's just never ending change, but that's really, really good stuff, man. So with what you're doing today, is there asset classes you focus on? I heard you say Tennessee and Florida markets. Those are kind of the markets you focus on. Is that right?
I originally sold a lot of our small properties in 2019 when I had that reflection point, and I was now traveling around Florida, a little bit in Georgia, North Carolina, looking for that next market, because now I had properties that were selling or had just sold, and now I wanted to identify properties for a 1031 tax-free exchange.
Yep.
So that was interesting, flying around during COVID. But I eventually, after checking out a few markets, I was in, Raleigh, Fayetteville, North Carolina, looked at a few assets in Charleston, and I was on the Panhandle in Florida, Panama City area, and I drove that trip. I had planned to drive around into Tampa, and I had my eyes set on Tampa because the demographics were fantastic. So I was excited to drive in, and wow, what a beautiful place. I came in on Route 60 into the Clearwater area, and man, I'm like, I hope the properties that I'm seeing today will pencil, because this is a market that I'm very, very interested in. And I bought a property shortly after there, and since I've really gotten familiar with not only that Clearwater area, but the St. Petersburg area. So I have a great partner down there who I met in that first mentorship community I joined 3 years ago. And, we're building up a small portfolio down there. And I also have a property in Gainesville, Florida, and then Knoxville, Tennessee.
Gotcha. You're just all around me. I'm in St. Mary's, Georgia, and you're like bouncing south and north and all around me. So maybe we'll run into each other in the field at some point.
Yeah, it's funny you say that. Just because this weekend I was talking to a few investor friends that I met down there, and I like endurance running and triathlon, stuff like that. I just run a 50-mile race 2 months ago, and going to Georgia, I wish I could remember the name of the city. It's called the Farm Days 24-hour run, something like that.
Right.
So I will be in the it's well outside any inner city in Georgia, but I'll be running for hopefully 24 hours with some investor friends at the third week of February.
50 miles?
Well, I did 50 miles. This one is going to be, how many miles can you do in 24 hours? So it's more of not running fast. I think it's going to be more of that tortoise concept.
Yeah.
Slow and steady. And, you don't want to burn out after 13 when you got 9 more to go.
What a great parallel for business and life, though. You can't go gas pedal down all the time or you'll blow the motor, right?
No doubt. No. And once, to your point, normally when I race, I start out quickly normally and hope for the best. Hope that my conditioning and it's my day. This one is much more strategic. I just can't go running out because I'll just burn out.
Yeah. Yeah, it's interesting. So I'm just curious now, you got me interested. So are you running every day? What's your training look like?
I've been running 5 to 6 days a week for the last 12 or 13 years. So I've got the foundation built. So, trying to do some things that are beneficial to ultra marathon type things, which isn't just running. I learned from the last one. And also, once again, we learned from challenges.
Yeah.
Opportunities present themselves. And I'm trying to really build my strength, my core upper body, because once you get past, 25, 30 miles, your body needs to be strong.
Yeah, absolutely. Very interesting stuff. All right, switching gears back over to what we do here. What simple marketing strategies have initially allowed you to have traction with investors? What's worked for you?
Just being in the business so long, when I started getting into larger acquisitions, the syndication structure has been utilized. I still do some joint venture projects, but I have been part of syndications in that St. Petersburg, Florida market, and I just relied on that database of people, business acquaintances, family, friends that I've built up from being in business for a couple decades, and made the same mistakes many money raisers do. Yes, I let everybody know what I was doing, but didn't have a real system to nurture the investors. It was having phone conversations, meeting them for lunch, not doing much else. But then when that first deal came around, it's going back around saying, all right, I got one. Yeah. But I didn't warm them up nearly enough to be comfortable. Yeah. So at that point, I realized the importance of at least staying in touch with them on a monthly basis, letting them know what was going on, deal flow, anything that was exciting me at the time to keep them interested.
Yeah, that's really good stuff, man. I agree. There's no better marketing than word of mouth, referral, repeat, but doesn't happen overnight, So for somebody who's new, getting into this game, who's like, hey, I want to start raising capital February 1st, a week and a half from now, and I'm going to be rich this year from it. They probably need a reality check. Wouldn't you agree?
Oh, man, would I agree? So if you're going to be able to do it by yourself or with joint ventures, I have had private lenders that have helped grow the business, over the last couple decades to build those portfolios. But raising equity for syndicated structured deals, it's a whole nother world. So it takes us back to when we started this conversation. Yeah, I've been a multifamily real estate operator for a long time. I'm very confident in operations, but I just started raising money professionally 3 years ago. Yeah. I'm learning from all the other people that I'm putting myself around, who's raising a lot of capital. Yep. And what are they doing? Because I got to follow them. Success leaves clues.
Yeah, there's some folks that are raising so much money that it just makes you go, how is there such a gap between these guys and everybody else? And it's pretty interesting. So absolutely. All right, what's been the biggest mistake you think you've made so far, maybe your biggest regret kind of in this journey for you in regards to your marketing? And you may have already touched on that a bit.
Oh, and it was making the common mistakes. I guess I'll just speak for myself, but just taking it for granted that I'm Bill Hamel. I've been doing this a long time, with a degree of success. Now I'm going to share these investments with all the people I know and love, and they're going to line up and invest in my deals. And that was the big mistake, as we touched on. But shortly after, it was, it took me some time to understand that I have to have a CRM, something like ActiveCampaign. You have to have a website to act as, at least as a landing page. You have to have a social media presence. So if someone is interested in you, they're going to go to social media. I think everybody or most people do that these days. If you want to research someone that you don't know,
Yep.
You don't want to be a ghost, so to speak, on social media. So finding the traction, the learning curve with a CRM, so you can utilize it to all its potential or a lot of its potential, and social media, that's a whole nother story.
Absolutely. What's been your favorite channel so far on social?
It's tough to say. It is really tough to say. I'm still trying to figure these out. Oh my goodness. I would have to say it's just because I get more engagement from Facebook.
Yeah.
Originally, the obvious choice seemed to be LinkedIn, and I am very active there. But once again, my social media pages, I've made them so they are basically just real estate.
Yep.
I don't get into politics or much other stuff because it's all real estate. So that's the proximity I've put myself in. And not only when we are seeing capital raisers raise astounding amounts of money, I'm witnessing those people are killing it on social media. So clearly, social media can translate into raising a lot of capital.
Yeah, the people that are doing that, from what I see, I can think of 5 or 6 right now. Their consistency is relentless. So obviously, they're not doing it themselves. Those people have other stuff going on. They are not doing it themselves. So they've got a person or maybe a small team just doing it for them, because otherwise, if you're busy, we only got 168 hours a week. You're going to miss a day that these people just never do. So what are you thinking about? So we're recording this in January of 2024. What do you think the market's going to look like? And what do you think the capital raising environment's going to look like this year? What's your gut say?
Oh, geez. Listening to a lot of experts and I just feel like 2024 is that in-between year. So we had 2022 when rates started to skyrocket. We all thought it was going to affect us almost immediately. Every market cycle downturn or upturn, it always has, I'm going to say minor differences. In this case, massive differences. Yeah. But it's been a long wait since rates have gone up. It's a huge buildup to a recession that may or may not happen. I don't want to be the prognosticator on when that's gonna drop, whether it be hard or soft. Yeah. But as we've been discussing in the real estate investing world, a lot of people got into debt products that may not be favorable at this point in time. And loan terms may be coming due. They may be running fantastic properties on the operations, but their terms may be coming up and they may be forced sellers. So I think that is automatically going to create some deal flow. Yeah. And some sellers with a degree of motivation to at least market their properties that are worth purchasing, or at least negotiating, meaning deals are going to start penciling.
Yeah. That's funny. You'd mentioned Florida earlier. So I live 1 mile. Actually, I live 7/8 of a mile from Florida, coastal Georgia. And I wanted a Florida beach condo in Northeast Florida to pencil so bad for short-term rentals and private use. I couldn't get it to happen. The mortgages were too high, rates were too high, wouldn't work in all the calculators I was using for short-term rentals. And, it's funny, I just crossed the border into Georgia where I live, and it's like, hey, I'm 30 minutes, 35 minutes away from Amelia Island, and they pencil really nicely here. And it's like, hey, I should be able to cash flow right away here. It's great. So it's funny, when you mentioned stuff penciling, when my wife being involved with this, was making it an emotional investment. And I was like, no, we have to use data so we don't make a mistake. And I showed her the tools and like AirDNA and Rabu, and I like Rabu a bit better. But once you started to understand the numbers and what they meant and why it matters, we were able to say, okay, these markets are worth looking at based on what the data says now about short-term rentals, and these other ones, even though we like to visit them, doesn't make any sense at all right now. So I think for some people, that could be a painful lesson if you're not disciplined on the numbers,
Absolutely. And it's a completely different asset class. I know multifamily, long-term rentals, right now looking at, some short-term rental style properties, 1 family, 2 families down in St. Petersburg. So I can have somewhere to go and, carve out some time on the calendar for myself and my wife to enjoy. But when we're not there, we'll Airbnb it. And I'm learning. Yeah. And boy, it's completely different, especially in that Pinellas County outside St. Petersburg, where I literally last weekend when I visited, I had a map and there are spots on Pinellas County that allow short-term rentals, and there's many spots that restrict it. So, you better do your homework. And then that whole nother component of short-term rentals, what do we do for CapEx there? It's a different rental, a different product than what I'm going to offer on the long-term side.
Yep. So yeah, it's I tell you the scariest thing about short-term rentals is regulation. So, that's the thing. Like I was looking at Savannah, Georgia, which has a good market, but if you're anywhere near like historic downtown, there's literally, they only allow so many, right? And if that's full, which it is, you get to go on the wait list. I was like, I don't want anything to do with that. And you got to pay fees and all this stuff. So it just eats into your profits. And it's like, okay, so where we're at here at St. Mary's, property we're buying, it's a 4-bed, 2-bath, real pretty historic downtown, redone 2 years ago. It's 13 minutes away from home. So my wife and I can get over there and learn kind of how we like it managed, and then, maybe teach people to help with the cleaning and that type of thing. But we've got an interesting mix of a Navy base here, which is always growing. We've got tourism. We got people that want to go to Florida but don't want to stay there. So we have this really interesting mix of tourist ties that I don't think will go away. I don't want to say it's recession proof, but I think a lot of snowbirds and retirees that continue to come here for a lot of reasons. So numbers look good. We'll see what happens, right? We'll see what happens.
Yeah, when we're analyzing real estate markets and real estate deals, we don't want to have all our eggs in one basket, meaning go and investing in a long-term asset when you have one employer in town. Yeah. So a lot of similarities in Pinellas County that you're dealing with is, you just don't have the beach. There's so many other things, that will support short-term rental. But also to your point where the regulation, I'm with you 100%. Being in New York, it's hard to invest aggressively when we don't know what the rules are going to be. Yeah, New York continues to circle the wagon and get more regulatory, and that changes our business model. It literally changes how we do business based on what New York State dictates.
Yeah, it's crazy, but you're not wrong. So our big focus this year in business, both on the marketing business and the real estate business, is diversification of income streams. So in my small real estate company, we're focused on one short-term rental. We're going to do some wholesaling, and we're going to raise capital for a short-term rental fund, because raising capital is not going to make you a bunch of money right away. As you know, unless you're raising $50 million a year, then you're doing just fine. But most people aren't doing that. So you've got to have other things in play to pay the bills and have something to see grow. So.
Yeah, no, absolutely. And everybody's got a different situation. Everyone's had a different journey. I'm in New York. I've got a nice footprint here. I've got some nice assets here that I've owned for a long time, and some properties that we purchased 2-3 years ago that we're repositioning and stabilizing. But in New York, I'm a deal finder, capital raiser. So when you're finding deals, you might be able to make some upfront money on acquisition fees and such. But, when I'm investing down south, I am exclusively a capital raiser, with the exception of some other resources that I can bring to the table from being in the business for a long time. So when I'm looking at my what I call a portfolio stack, you have your long-term investments, your liquidity events, and you have to have some short-term cash mixed in with some of the long-term cash as you're building your wealth.
Absolutely. All right. So we've talked about this a bit. Let's say I'm a brand new capital raiser and I'm like, hey, Bill, I'm going to quit my job and raise capital. What piece of advice would you give me, especially around marketing, if I wanted to get started?
Well, build that database, pick a CRM, dig into your phone, all your contacts, build that database day one and start making connections. If you're going to be a capital raiser, you not only have to do that, you have to turn into a professional networker as well. Yeah. At the end of the day, it comes down to having the conversations, building the list. That's what we're trying to do with the funnel me and you have spoken about several times. Yep. Since the beginning of my investing career, you can never have enough cash. Cash is king. If we're active investors, we run out of cash, and we need to build that list so we can raise equity when that next deal comes around.
Yep. So what do you think about the person who is extremely introverted, who's like, I don't really like to network. I don't really like social media. Is this just maybe the wrong thing for them to do, or what are your thoughts on that?
Oh, man, that's a great question. I am an introvert. And sometimes I have for sure. So, 3-4 years ago, I wasn't doing this. 3-4 years ago, I was a busy guy. My superpower was, finding deals, working hard, and maximizing operations on our assets. I was justifying avoiding my networking events in New York. I was part of them. I'd show up when I want, but you're going to get the most out of networking if you're consistent.
Absolutely.
And I reflect here and there where if I didn't have my body of work behind me, and I'm so grateful I have that credibility piece now.
Yeah.
Because I am an introvert. If I was just getting started and I was super introverted, boy, that's challenging to raise capital.
Yep. Yeah, I asked the question because I have clients that are like, hey, this is who I am. Is this going to be hard for me? I'd say it's going to be harder for you than it would be for me because I'm a big extrovert and I love that shit. You know what I mean? You may be able to do it as an introvert, but my understanding is it's incredibly draining. You got to go recharge and do your thing. So yeah, it's popped into my head, and I was like, let's see what Bill's got to say about it. So,
well, the only thing I can add to that, Jason, is when I jumped into that first mentorship group at the end of 2019, 2020, I realized very, very quickly, and this is what Gino Barbaro, preached from Jake and Gino was, do you have a fixed mindset or do you have a growth mindset? And if you're going to have a growth mindset, and if you want to grow in this business, you better have a growth mindset. And what comes with that is if you're an introvert, it's time to get outside of your comfort zone. So you better get out there, get out of the comfort zone, put the reps in, get comfortable being uncomfortable, and you'll be better for it.
Yeah, I think it's fantastic advice. Absolutely. All right, cool. Anybody who is watching or listening, if they're interested about, what you are doing or what you're up to, what's the best way for them to do so?
Go to collectingrealestate.com. We just built that website a few months ago, and a lot of it has those correlations between what it takes to be a successful real estate investor as we are, running at night, and cycling, swimming, all of that. There's so many correlations with what it takes to be a successful investor and a successful endurance athlete.
Absolutely. Awesome, man. I appreciate it. As always, it's great talking to you. Thank you so much for coming on the show.
Thanks again, Jason. This was fun.
Yeah, awesome. Take care, man.
Bye-bye.
Thank you for listening to this episode of the show. I had a great time making it, and I hope you really enjoyed yourself listening to it. If you want to keep up with all things Real Estate Investor Marketing Stories podcast related, I encourage you strongly to go to reimarketingstories.com and signing up for our podcast newsletter. We will simply keep you up to date with what's going on with the show, new episodes, and things like that. reimarketingstories.com. So hopefully today's episode and the other episodes that you'll listen to will remind you that as a real estate investor, everybody starts at the beginning, okay? Our guest today and the other guests that you will hear on this show will share their real story, right? They'll tell you what worked, what didn't work. And I want you to remember one thing, if you remember nothing else today. It's possible for you too, okay? Never stop going and keep following your passion. Finally, today's show has been brought to you by capitalraisingautomations.com. If you're an active capital raiser, you are ready to learn the 3 areas that are holding you back from raising more capital, I strongly suggest you check out capitalraisingautomations.com. Check out our free 10-minute video there, and you let me know if it doesn't provide you value. I'm sure it will. All right, thanks again for listening to the show this week. Hope to see you next time. Take care.